what you need to draw on the daily, first of all, is the previous week's high and low zone. So it's pretty much, as I'll show you right now, just the space up here. So the high zone for the previous week was that right there. So that was the previous week's high. Now, another note I'll make is psychological numbers, which is pretty much just round numbers. They make your zones stronger. It's not an indication to buy or sell a psychological number, but it does make your zone stronger, whatever it is. So if I draw that on there, you can see that the psychological number of 144 dead was also the previous week's high zone. So we wouldn't really want to be holding a trade past this point right here. So that is the previous week's high and 144 dead. What is the previous week's low? So Monday, Tuesday, Wednesday, Thursday, Friday. So the previous week's low is, if I draw it on, this right there. So this is also a zone which we could look for rejections of, which, as you'll see right now, is what is happening. So firstly, on the daily, draw on the previous week's high and low zone, which is just the difference between the highest point. So for the previous week's high, the highest point the daily candles closed at to the highest point it reached. And then the low is the lowest point the daily closed at and the lowest point it reached. So we now have these two zones on. Also on the daily, you can get a few other zones on, but it will usually always be your previous week's high and low. So say price was, I don't know, tapping into here, that could be a potential zone, but it's pretty obvious like that. So what you need to focus on the daily, previous week's high and low, and then there may be some other potential daily zones somewhere. Now, the next step on the daily is, what are the daily candles actually doing? This will tell you a lot, and it's very important. So the actual anatomy of the daily candles is going to help with your bias. What you can see is that Monday and Tuesday, these two candles have dipped below the previous weekly low and then come back up. The first one was a weak bearish, and then the second one was a bullish candle. So as you can see, if I break it down, price tapped into what the 144 zone, was then a strong rejection. There was strong bearish candles coming to the downside. So a strong push, a strong push. The bodies then started to get weaker. So it was a weaker body there as a wick was starting to be created to the bottom. And then on Monday, there was a weak bearish body. That is very weak compared to the push down. And both these two candles wicked down and then came back up. So we can safely say that we are rejecting the previous weekly low zone, because the daily candles are telling us that, because they both dipped below and then came back up. So knowing on the daily that we are rejecting the previous weekly low zone, we can now say we are starting to expect the next push to the upside like this. So we can get a push from here up like that. So we can say that because of what we're seeing on the daily. A bit more depth here on the daily about how we actually use the previous weekly high and low zones. I've got an example here. So this was the Monday starting next. You can see the previous week, Friday, Thursday, Wednesday, Tuesday, Monday. So what I'm going to draw on is the low for the previous week. So that was the low right there. And then the high, it was a pretty big high zone. I'm still going to draw it on anyway. What I'd sometimes do is tighten it up on the 4-hour, but this is a video about the daily, so I'm just going to draw it on like that. And what we'll see is the Monday candle, if I play it out, you can see it taps in and starts to show rejection to the upside. So at this point, we can start to think, I'm actually going to just sharpen it up on the 4-hourly for you now. So that was kind of a bit tighter, and it did end up rejecting it with a push down on the daily candle like that, leaving that upper wick. So at that point, we can start to think we're going to see a push to the downside because we're rejecting the previous weekly high zone. And what happens? Well, the next candle goes all the way down to the weekly low zone down there. Now, we can't say we've rejected it yet, but what does happen is the next candle goes all the way down and then closes above it like that as a bullish candle. We're leaving that long low wick. So we can say at that point that we did actually end up. So if I tighten it, I'll just make it like this. I'd say that was previous weekly low zone. What happened? Well, price went all the way down, came all the way back up, and then closed like that. So from that point, we can say we're now expecting a big push in the next candle, because we have rejected the previous weekly low zone. What happens? The next candle pushes way up like that, way above the previous weekly high zone, and then keeps pushing to the upside. Because that candle there told us that, going into this day, we'd be super bullish, because not only was it rejecting the previous weekly low, but the actual anatomy of that daily candle was so bullish. A very long lower wick tapping into all sorts of zones and a strong bullish body. That's a very clear rejection candle, and it told us that we were going to have this candle right here. So on that day, we'd be looking to catch some nice buys. About 2 weeks later, there was this high zone right here. So this was the high zone for the previous week. And then what happened on this daily candle? Well, it went all the way in, tapped in, then came all the way back down. Very long upper wick and a bearish body. Super bearish daily candle right there. It was just a rejection of the previous weekly high. With this, the anatomy of the candle was very bearish. We could have predicted that the next daily candle was going to be a super strong bearish candle, just like that. And you could have caught sells in that day because this daily gave us the bias. You've also got a 4-hour bias as well. But actually just looking at the daily, and so you can see how I break the daily down. All that happened is that the candle tapped into the previous weekly high and then came all the way back down. Very clear rejection of that. Also, what I'll show is that this was a Friday, so the next day, Monday, was starting there. So the previous weekly low was that there. So going into Monday, that was the low. And what happened? Well, price tapped into the low, just into it perfectly, because this is how the banks trade on the higher time frames. It tapped perfectly into the previous weekly low and then pushed off to the upside. So you could have caught buys in that day from that point if the 4-hour agreed with it. And then from that point, it just pushes off to the upside. So you can see how they actually tap into time after time again, the weekly highs, weekly lows, and the candle anatomy helps with this. So this is how we use the daily. It's not insanely important. The 4-hour is definitely more important than the daily, but on the daily, we do use it for previous weekly highs and lows and candle anatomy.